Morning all. How are we doing? Sorry, I should have left the mic muted while I cleared my throat, shouldn't I? Rather than doing the throat clearing while the mic was unmuted. How are we doing? Morning, Ian, Amy, Peter, Naughty, JC, Baggy, Kennelly, Tom, Mumo, Virginia, Gregors, Danny. How are we doing? So, still not any further forward with anything. Nothing's moving. We're still stuck. Aussie New Zealand's had a nice little rally this morning. We had news overnight from the Aussies. So the CPI came out at 4.3. So that's obviously 0.1 lower than forecast, and the forecast was 0.5% down. So CPI coming down nice and quick for the Australians, which means that there's no real reason for them to increase interest rates any further. So Aussies are currently sitting on 4.35 interest rate, as with everybody else. No interest rate changes recently, and inflation now obviously coming down a lot faster. Still the highest pretty much in the world apart from New Zealand. They're both doing the same basically. But that's good. So it takes the pressure off interest rates, which is long-term bearish for, let me just shut that terminal down so I don't keep opening it, which is long-term bearish for the Australian dollar, but it's had a little bit of a pop on it this morning. So if you did take that ADR reversal RSI reversal yesterday and ADR reversal yesterday, you should be out of that now. We're back in propulsion. So that was an entry yesterday because that was an ADR. It was 35 is ADR. Is that 35 ADR? Bloody hell, that's small. So that was 48. So about 130-ish ADR yesterday. So you had an ADR reversal yesterday, which would have played out. So you should be out of that now. If you took the H1 off of the 30, I think the entry was probably late last night. You had an entry this morning, which gave you 3/4 of an ADR. So that is your ADR hit this morning. That's it. There's nothing else hit ADR. If you look at the other Aussie pairs, very, very small rally off the Aussie. So that news, that CPI news, didn't really move the Aussie much. It's mainly the New Zealand dollar that's had the impact there with the Aussie. So New Zealand dollar not really gone anywhere either. Nothing's going anywhere. This market, I haven't seen it this quiet for a long time. It's something's brewing. This is really weird for January. Really weird. January normally gets the year started. We normally kick off in January, but this is flat as a pancake this year for some reason. I don't know why, but anyway. So that's your only ADR hit today. RSIs, guess what? Flat. Again, nothing to look at. So at the moment, it's just dead. The market is flatline. Nothing's moving. There's no injection of cash anywhere. There's no directional bias anywhere. I think the market is scared to do anything until we get some interest rate change news, because at the moment, we're poised for everything to drop. We're teetering up here, waiting for that to happen. And we have got no indication from any central bank, really, when that's going to happen. It's all data-driven. Every time we get an inflation figure out, it's pretty much where the forecast was, so there's no deviation. There's just nothing to move the market at the moment. It's dead. So yeah, haven't banked. I banked yesterday. Obviously, that was the euro-yen yesterday I banked. Straight down into propulsion target. The rest of this is just flip-flopping around. So the other yen positions I've got on at the moment, we're back up at the highs. So I might get another one on the pound yen today. Nah, not going to get one on that. It needs to go out that high. US dollar yen, nowhere near. I don't know what to do. It's not moving. You can't make money when it doesn't move. I'm just going to sit here and wait. If I can scrape, at the moment, if I can scrape 5 or 7% out the month, it'll be bloody good. That's the way it is at the minute. Morning, everybody else. Haven't said a morning to. Monkey, Timber, Outro. How did the hedging strat do yesterday? As the hedging strat's not really any good. I said yesterday, 3 minutes to the open. I'll just quickly cover the news. So overnight wise, there's nothing much to look at. We had the Australian CPI overnight. SEC, unknown party accessed its Twitter account. There's no other real exciting news overnight apart from the Securities and Exchange Commission having their Twitter hacked. But apart from that, no other news. So what today we've had obviously the CPI, which hasn't really done an awful lot. This afternoon we've got Bailey speaking. So Bailey may well this afternoon give some indication as to whether we're going to get an interest rate drop this quarter or next quarter. I think it's more likely going to be this quarter. But we may well get a bullish or bearish move off the pound this afternoon. So that's 15 minutes before the New York Open. So we'll see what happens there. But there's no other news today. That's it. We've had that. We've got Bailey speaking. He may or may not say something. If he doesn't say anything, there's no catalyst there. So it's all about tomorrow, 1:30, waiting for that CPI figure. Hopefully that will kick the US dollar off, which will kick everything else off because everything's just waiting at the minute. So we'll see. I'll go over the hedging strategy in a minute. I did cover it yesterday afternoon a little bit, but I've fallen out of love with hedging again. As I always do, every time I look into hedging, I go, oh, this looks great. I've figured it out. And then I go, yeah, but that happens. And it's just a horrible thing. So I'll go for it in a minute. Right. So DAX this morning. There was no trades yesterday on the DAX or the FTSE because the ranges were too tight. This morning, we've got a very big move pre-market. So it's the opposite today. So I will be definitely taking pre-market breaks on the DAX and definitely taking pre-market breaks on the FTSE. So we will find a range that falls within that 10 to 20%, and that is what we'll take. At the moment, it looks like it's going to be the 15. And it looks like it might be the 15 there as well. Yeah, so going to take the 15-minute pre-market ranges today. So yesterday we had a down day. Day before we had an up day. Day before we had a down day. Day before we had an up day. Day before we had a down day. We're not going anywhere. Same as everything else. We've got intraday movement, which is nice, but we're not actually going anywhere. Nothing has got any directional bias. So your guess is as good as mine today. We'll go with the momentum as usual. So pre-market range is taken on the 15-minute. Oh, blimey. DAX is off. So DAX upsides today, we're looking at ADR, which is previous day's high, and yesterday's high is just shy of ADR. So that would be your upside target today. Downside target is going to be yesterday's low. Which is basically where the pre-market low today is, pretty much. So we're looking for a breakdown to our breakup 2R and 5R for targets to the upside. FTSE, it's basically the same. It's ADR. So previous day's high, yesterday's high, that high from I think that was Thursday last week. And then downside, we're looking at the lows of the week. We break down. So at the moment we're breaking up. Momentum's long. Momentum was long before the open, so not surprised it's broken up. They're obviously buying stocks up at the moment. When's the next batch of earnings? The earnings fortnight kicks off on the 23rd. So not next week, the week after. So we got some earnings coming out on Friday, but earnings fortnight kicks off 23rd of Jan. So that's when we're going to start to get the volatility on the indices. Was defo Elon Musk doing it? Yeah, hacking the SEC. He's got a reason to hack the SEC. Morning, Martin. Morning, Shala. Right, FTSE has broken along. We're back inside the pre-market. Actually, it's pre-market 10 taken on the FTSE. Actually, it's the pre-market 5 taken as well on the DAX. So we seem to have dried up a little bit at the open. 2.5 minutes. Morning, Christian, Dev. So we'll wait for this candle to close, which will be your 5-minute cash balance. Not particularly strong open this morning. FTSE struggling to go long. Might get hedged on that today. We're struggling at this high from yesterday on the DAX. So yesterday on the DAX, we pushed up in the afternoon and hit that area, which is basically where that initial push back from the bulls got thwarted there. They got hammered back down again. They attempted another rally for 4 hours and couldn't get through. And we're basically at that level at the moment. So we know there's a lot of selling pressure at this level. This is where they started to try and move down before, and then they took control. So we may find that we can't get through this level again this morning, which means we're going to push down and retest these lows. FTSE's breaking short, hedging on the FTSE. So FTSE targets, I'm going to move targets up to just under ADR on the FTSE to the upside. Downside, I'm going to bring the target up to just inside last week's low, which is there. So we'll be getting out of the shorts on the FTSE on a breakdown into retest this area here. And upside will ADR. There's nothing basically yesterday that gives me any confidence in being a support resistance level. So it's either going to retest that area, it's going to retest that area, or it's going to flip flop. If it flip flops, it's a hedge. It's locked in loss. DAX is struggling as well. No momentum again today. I'm almost at the point where I just want to take January off. Literally, I have never experienced anything like it. We're 10 days into January. I've banked 2%, and the market is just dead. It's like then banks aren't operating. Nobody is there. It's weird. It's just weird. I've never seen it like this in January. There's your 5-minute cash balance on the DAX. 22 points. It's nothing. No momentum. So if you didn't take the pre-market, that is your range, which is over 10% of ADR. So it's valid as a trade. No idea where this is going. It's got no legs at all, is it? We'll come back to that in a minute. So the hedging strategy, I was working on developing that further yesterday. I've been working on it for a good couple of weeks now on the EA. And the initial hedging strategy is sound. It will bank nicely, as you can see. It will always be in drawdown because it's a hedge. So you're always going to be hedged on a multiple pairs, which means you're always going to have a locked-in hedge loss. Whatever that is down to your risk. So this is running pretty high risk at the moment, just because it's testing. But the problem I'm finding with this strategy, and this is the problem I've always found with hedging, is getting out of the hedge. Yeah. So what I've found in my testing is, this happens on all pairs. The P&L will go like that. Yeah, as you're controlling drawdown on the hedges and you're getting out of the hedges. And then it will go like that, and then it will do that, and then it will go like that. So it's a gradual grinding process, because what happens is either You get into a trade and it goes your way. It makes you profit and you bank it, which means you get a spike up in your P&L. Or you get hedged and you lock in that hedge, whatever that hedge is, however big it is, it doesn't matter. And then what happens is the price moves in your direction, and then you get out of that hedge at some point with some method, whatever that may be. And then price pushes back up. The ideal is we want price to push up a distance which brings the drawdown lower than the profit you made on that short, and then you can close the whole thing out in a profit, walk away, job done. Yeah, that's the ideal hedge. What happens in the real world is 20% to 30% of the time, the market breaks and goes into a trend. On those trends, what happens is your hedge gets exponentially larger and larger and larger. Yes, you are banking profit. Great, that's getting bigger. But this is getting huge. You're long from there. You are now short from here. So the hedge is 5 to 6 to 7 to 8 ADR. The only way to exit a hedge like that is to work the inside of the hedge. So when price pushes up, you re-hedge, and then you take profit on that re-hedge to pay for the thing that's in drawdown. The problem I find, and I have always found with hedging, and it's reminded me now I've been developing this EA again, is that you will be able to get out of all of those. No problem, because the market moves in waves. It moves in market structure. We know that. You will always get out of these hedges. That's not an issue. I can always make it profitable long term. The problem with the strategy is you'll be locked into some of these hedges for 3 months, 4 months, and making absolutely no money. The danger is, and this is why I've tried to limit the exposure to 2 times per currency, is if the Aussie dollar drops dramatically, the New Zealand dollar drops dramatically, the US dollar drops dramatically, yeah, what you're going to find is you're going to have 50% of your portfolio in unbelievably wide hedges that you're going to struggle to get out of because they're trending down because interest rates have dropped. And you're going to be stuck there for 4 months and you won't make a penny. My backtesting has shown this again. And it's just because you can't get to work the inside of the hedge to get out of the hedge. So all that happens is the drawdown, it remains not too big because you're constantly working the other side of the hedge and you're getting out of it. But the problem is the time you are in the hedge, not making money. And that's the downside to it. So I've been trying to develop a way to get out of those situations, and I can't. It's just a fact of hedging. You're always going to be in a hedge and it's always going to be painful. So the idea of the portfolio approach was to use the profit to exit the opposite side of the hedges. Great, works absolutely fine, unless over 50% of your portfolio hedges. If 50% of your portfolio hedges, you can't work all of these using this profit. It's not enough. So therefore, you can't do the drawdown control. And the whole edge of my strategy was the same as position trading, using profit to do drawdown control. The problem with the hedges is you don't make enough profit to do drawdown control on all of these. So it doesn't work, basically, is my finding. I'm still going to look at other alternatives. I've got a couple of other ways of trying to do it. The theory is very, very sound, and long term it works. Yeah, I haven't got any doubt that if I left this account running for a year, it would come out profitable. I've back-tested that. That all is fine. Yeah, it's profitable. So I'll show you the back-testing. DAX is just pulling back inside the range. So we'll see if this initial cash balance has got any buyers in it, but to me it's looking like it's not. So we might hedge this as well. So yeah, so the back testing across all the pairs, yeah, I mean it comes out very nice and profitable on an awful lot of the system parameter permutations that I've run. Yeah, you can make a profit long term. This is a 8-month test, 6-month test, 6-month test. So it's only short term, but it's profitable. So there's, you know, I have no doubt it works long term. But when you actually put all of these results together in in Quant Analyzer, you see a P&L that looks like that. Yeah, which is lovely, but I can't make money. It's an investment strategy, if you like. It's not something that I can pull money out. I need to be able to pull money out each month. I can't pull money out when I'm sitting there for 5 months going nowhere because we've got into a squeeze. The difference between position trading in a squeeze is not everything squeezes at once. When you're hedged, everything squeezes because you're hedged. You can always get out of some of these on a pullback by using aggressive drawdown control and by using lot increments, basically, as we know. You can't really do aggressive drawdown control on something that's hedged because it just doesn't work that way because you're not scaling into a move. You're doing whatever the market's doing. Yeah, it just doesn't. I just can't make it work the way I want it to work. So it's a long-term thing. And that's not what I'm looking for at the moment. I'm looking for diversification on my account. So what I'm going to do is I'm going to run ADR reversals alongside H1M5 mean reversion. And I'm going to use that 30K that I'd allocated for that strategy. And I'm going to put that into ADR reversals instead, using 125 extensions. So I will keep plugging at it because I think there is definitely something there, but the approach that I was looking to take on it isn't going to work for me anyway, for the portfolio that I need to run. So there you go. There's the update on the hedging strategy. It's one of those EAs which kind of everything I do is profitable, but it's not a really nice edge. It's an edge, but it's not a nice one. It's just I might as well double my position trading account. I'm going to get the same return, and it's so much more complicated hedging. It's just so complicated. So I can't be bothered, basically. Is the long and short of it. There you go. That's the update. Ever looked at how open price returns to the previous night's open price the next day? No. I know some people have. It's just another way of trading, isn't it? So yeah, I mean, you can use that. But I've never really looked into it or studied it. Looking at a strategy at the moment where the closing price is above the current price, the first candle bar. Oh, yeah, I've seen that strategy. Try it. Use it as a stop loss. Morning, day trader. Yeah, I know who shared it with you. I've built it, back tested it, doesn't work. Morning, Mark. Okay, so we're trying to push up again from that propulsion gap on the DAX. See where we go. It's an old stock trading strategy, the previous open. Using the previous open. It works in the same way as VWAP. Volume weighted average price does intraday. It will test it, and when it tests it, 50% of the time it will work, 50% of the time it won't. You use a stop loss on it, therefore it's exactly the same as flipping a coin. Doesn't have an edge. In the same way as a gap fill doesn't have an edge. So when you trade gap fills on indexes, sometimes they'll fill same day, sometimes they won't. The edge is 50-50. It's the same. Everything's 50-50. It doesn't matter what strategy you use. You can pick anything. You could say, I'm going to use the open of last week and it will return to it. Yes, it will open. It will return to the open of last week sometimes. Sometimes it won't. Sometimes this propulsion gap will get tested. Sometimes it won't. Sometimes it will push up into resistance. Sometimes it won't. Sometimes it will return to yesterday's open. Sometimes it won't. You have to apply a risk-reward strategy to it. That will have a losing run of 10 to 15. You will lose faith in the strategy and you will hop to the next one. It's exactly the same with every stop loss strategy. It will have a big, strong losing run. Have a look at the DAX on the bull run. Yeah, look at how many times it returned to the previous day's open. Look at what your losing streak would have been. Same as all strategies, everything's got a 50-50 chance in it. But you know, use it. It's all I'm saying is it's not good, it's not bad. It's just the same as everything else. It's got if you're using a 1.5 hour or a 2 hour, you will have a losing run of 10 to 15 trades. As long as you're happy and accept it, that's fine. As long as you can hold it through the period of 6 to 8 weeks where it never makes a penny and then starts to have a run, it's fine. But that's the same as every strategy out there, isn't it? Every strategy has a losing run. This is why nobody stays with any strategy for any period of time, because as soon as you hit a losing run, you go, that's crap, I'm moving on to the next thing. It's not crap, you just got a losing run. You just don't have the patience to sit through the losing run. That's human nature. It's no slight against anybody's trading. That's just the way we are as human beings. You are going to find the Lamborghini Holy Grail strategy. Because you use a stop loss, you won't, because it won't ever work long term. Got to have discretion in there. I don't know if you answered my question, but how do you manage the two currency rule? What do you mean, how do you manage it? So basically, if you take a trade and it shorts that and longs that, and then you take another trade and it shorts that and longs that, you're exposed. That's it. You don't take any more Aussie. It's explained in the bootcamp. This is what the trade manager dashboard is there for, is to show you your exposure. If you have got 2 shorts on the Aussie dollar and you get a setup to go short Aussie dollar, US dollar, whatever, you don't take it because you're exposed. Breaking news, FTMO has banned US traders. What? Where did you hear that? Since the establishment of the company, blah, 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 blah. Louisiana, South Carolina, Montana, Arkansas, and Delaware. Not all US clients, it's just clients in certain states, isn't it? Weird. I thought they were based in the US. Maybe they're not. Come on, Dax, make your mind up. There's just nothing, no volume today. It's like pulling teeth, this market at the minute, isn't it? What if you used it on FX pairs? Yeah, try it. I don't know, outro, try it. I built an EA to test. I don't know if it's the same strategy, but somebody told me about this ages ago. It's a well-known strategy. It's been floating around a long time. So is the London breakout strategy. That's shit as well. A lot of people sell courses on how to trade the London breakout strategy. None of them have got a P&L that's profitable, but they sell you a course on it. There's a million ways to do things, but I built an EA based on a return to open strategy. There's a guy, that guy that sells the mechanical trading system that everybody passes their proper valuations with, that bloke, he does a similar strategy. You get in at a certain time and you trade it back to the 9 o'clock candle of the previous day or something like that. It's all random. It's all curve fit randomness. But it does work sometimes, you know. So I removed from the VPS terminal. Oh, right. Okay. You're talking about using the market reversal alert CA. Okay. For exposure. Yeah. You can't control it unless you just remove it. So basically the way I used to trade was I have my VPS set up. Yeah. And basically what I would do is, the way I used to do it is I'd be sitting here going, I can't show you any setups because there isn't any, but I'd be going like, oh, look, we've got an alert on the CAD Swiss. Yeah. So I would get an alert on the RSI and the CAD Swiss, and then I would go over to the CAD Swiss and go, yeah, that looks like a good short. I'll take that. Have I got exposure available short on the CAD? Yes, I have. Brilliant. So I'd open my VPS, I'd open the CAD Swiss, I'd place the market reverse alerts EA on there and tell it to short for me. That's the way I used to manage exposure. Yeah. I didn't have the EA running on every currency pair, because if you do put it on every currency pair and you're working all day, you'll come home, and if there's been a massive RSI extension on the US dollar on news, it will have taken every US dollar short for you. You've got two choices. If it does that, you shut some out and then turn the VPS off on those pairs. Or I don't know. There is no real answer to it. The way I operate now, which is all explained in the PDF on the website, here, Position Trading Handbook. The way I trade now is I trade every single pair. So my VPS runs every single pair. Yeah. So it's running the lot, as you can see, every single pair. But the exposure or the risk is 0.1%, whereas I was using 0.25%. So all I've done is I've reduced my risk down by 0.15% instead of 0.25 using 0.1. And I'm trading every pair. So where I would limit myself to only trade short twice on the Canadian dollar, I can now trade short 4 times on the Canadian dollar, and that will give me a risk of 0.2% on the Canadian dollar. Yeah. So if I get into 5, I'll go to a little bit more. Yeah. So, but basically, I've just reduced my risk so that I can trade everything. There's no difference really if you think about it. But what it also does is it means you open yourself up to take every single trade. So if you go short on the CAD, so look at this one, for example. So if I'm long here on the CAD, long twice on the CAD. Yeah. So we've got the Aussie dollar CAD long. We've got the CAD yen long. That's it, isn't it? So there's the 2 long exposures. So I've got 2 exposures there. What can affect these trades? Aussie dollar CAD long. Why has I got 2 CADs? That should be short CAD. That's short CAD. Why is that showing the opposite direction? Oh, it's because it's hedged. Of course it is. Oh, yeah, this isn't going to work on hedging because it's both directions, isn't it? Yeah. So, right, let's just do it manually. So let's say Aussie dollar CAD, I go long on, which means my exposure is long Australian dollar, short Canadian dollar. Yeah. And then I take the US dollar CAD long. So my exposure is US dollar long, Canadian dollar short. What can affect these trades, these positions I'm in now, is either the Canadian dollar will rally and make me money or drop and send me into drawdown. The other thing that can happen is the Australian dollar rallies and I go into drawdown on the Aussie dollar CAD, but the US dollar drops and the US dollar CAD flies into profit. So I can close out the US dollar CAD and I will need to add a position to the Aussie CAD. Yeah. But if I had exposure on the Canadian dollar and I only took 2 trades, I'm going to miss all the other Canadian dollar movement. But that Canadian dollar movement, all the other Canadian dollar pairs aren't going to move because of the Canadian dollar. They'll move because of their crosses. Yeah. So it's better to have, I think, and I've been running this way now for over a year, exposure on every single currency pair, but reduce your risk. That way you're going to get into more opportunities. The squeezes are still going to happen and you're still going to get squeezed. But if you get squeezed 5 times on a currency, I know instead of only 2, but your risk is much, much lower, the drawdown is the same. Yeah. But you've got the opportunity of the cross against that currency getting you out of some of them. So if your exposure on, so the Aussie dollar, for example, we can get exposed on the Aussie dollar 1, 2, 3, 4, 5 times. Yeah. There's a 6th time there with the euro odd. There's a 7th time there with the pound odd. That's it. So you can get exposed 7 times on the Australian dollar. Okay. But the Australian dollar, once you're exposed 7 times on it, can go sideways for 3 weeks. Yeah. Meaning the Aussie dollar doesn't move. But the Canadian dollar, the Swiss franc, the yen, the New Zealand dollar, the US dollar, the euro, and the pound will all move. So some of them will be profit, some of them will be loss. So by getting into the Australian dollar 7 times, you don't need the Australian dollar to do anything. It can sit there and do absolutely bugger all for as long as it wants to. The other instruments will push the Australian dollar crosses, which means that you can bank profit on all of them. Now, if you just get into the Aussie dollar CAD long and Aussie dollar Swiss long, and the pound odd gives you the best setup in the world, you would go, I'm not going to take it. But if that pound odd is a push up and a pullback A-shaped recovery, giving you 1.5 ADR profit, you missed it. Why? Because of exposure. You miss opportunities. So you either go in exposure rule, high risk, or you go in no exposure rule, low risk, and take everything on the table. Yeah. Which means you're going to have a whacking great long pairs list here sometimes, but you're going to get stuff which is constantly going to bank more often, but it's going to be smaller amounts of profit. That's the only difference. That's the only way you can control it. So it's up to you. And I would say it's down to time, isn't it? If you work full time and you can't be looking at charts, then probably run it on everything. If you can be looking at stuff and you can stick the EA on charts when you want it to trade for you, do it that way. It's entirely up to you. There is no right and wrong. There is different. They're Prague-based, are they, FTMO? All right. Morning, Rajiv. Just a matter of time for FTMO. That's how it starts. Individual states file a cease and desist order. They don't back off. Ban. Here comes the SEC. Maybe because of hedging. Yeah. There's the problem in the States is obviously the FIFO rule. And the problem we are having since my Forex funds is these prop firms are all becoming regulated. They're all getting their own brokers. And obviously the problem with that is you have to fall in line with SEC regulations. So it means that basically if you live in the US dollar, unlucky, you basically can't trade. It's just one of those things. It's just a pain in the ass. But regulations change. There's always ways and means around things. So you go with another prop firm. But that prop firm that isn't regulated is going to be a little bit more shady than the others. But that's no difference to how we've had it before, is it? Before everybody started getting regulated. Trade with your own capital. It's just so much easier. But who knows? We'll see what happens. Morning, Neo. So just minimize your risk. Yeah. Thanks for subscribing. FSL Al Faslal. Telegram, Brian. As of January 2024, FTMO has suspended the purchase of the FTMO challenge for new and existing US clients and has also stopped onboarding new US clients. Oh, so it is everybody. That's not what it said on their website, was it? It said certain states. Unable to provide services to the United States due to market segment conditions. Cannot use the C-Trader platform due to regulatory. Don't use FTMO, basically, if you're in the US, I guess, is the upshot, isn't it? It's their decision. but there's not a lot you can do about it. So just try not to use prop, ideally, if you can. 0.1 is great because I'm worried about drawdown yet. So this is trading 0.1 on a 50K account. So got an issue with the RSI dashboard in my broker. It says after every pair .raw. So I can put them on the dashboard. There's no suffix option on it. Yeah, RSI dashboard, you've got a suffix field. There. Pairs suffix. Yeah. Unless you're using the MT5 version. The MT5 version doesn't. So you have to put the suffix in. So you would put eurocad.raw. You would put euro New Zealand $CAD.raw. Yeah. The problem with that is you're going to run out of characters. So you might have to run 2 dashboards. MT5, just don't use it. It's shit. MT5 is crap. Just don't use it. Use MT4. Everybody uses MT4. 90% of people are on MT4 because MT5 is pants. Because it stops you doing stuff like that. As coders, we would love to give you everything you like. But MT5 goes, yep, we don't do it that way because we're shit. Use MT4. If you don't want to use MT4, that's a solution. You just have to put the pair in exactly as it appears in the market watch, but you will run out of characters because there's a character limit. Thanks, MT5 rather. There's a character limit. So you'll have to run 2 dashes, split your pairs into halves. So run the first half on one dash, the second half on another dash. Use up twice as much processing power on the highest graphical user interface charting platform on the planet that grinds to a halt if you try and do anything on it. MT5. MT5, as Brian's just said. It is shockingly bad. I can go to 2 things exactly the same, put one on MT5 and one on MT4. MT4 goes like that. MT5 goes, let me think about that for 10 minutes. There's your line. Because it uses a graphical user interface designed for stock trading, and stock trading, other platforms surpass it by 1 billion miles. So MT5 was introduced for the stock market to use stock graphical things like footprint charts, market profile, and everyone went, but why would we use that? This is so much better. So MT5 died, and that's basically the story. So use MT4. If you bought it for MT5, sorry, they don't do refunds because it's shit. Anyway, moving on. I hope prop firms don't go bust. I haven't got rich off them yet. Good luck. Yeah, I didn't get rich off them. That's why I stopped using them. It's bloody hard work trading prop. It's the most frustrating thing. I liken every prop evaluation you take is like a trade using a stop loss. Some of them will work, some of them won't. Some of the evaluations you'll pass, some of them will fail. You'll be a brilliant trader and you'll be trading your strategy and it works absolutely beautiful like a dream, but their restrictions stop you out. That's what prop is like. It's just a pain in the arse, isn't it? Anyway, hedged on the DAX. It's going to be a losing day today. Thanks for the follow, whoever that was. Welcome aboard. Nadine. So hedged on the DAX. Just moving TP on the DAX down to just under ADR. Actually, I'm going to use yesterday's high as the target to the upside. So we've got yesterday's high, previous day's high, which was the close, and then we've got this area here, which is where we closed. So this area is resistance. So if we do push up, I'll be looking for a resistance bounce, regardless of whether it does that or that. We're looking for that bounce to get out the hedge. Downside, this is a bit close, yesterday's low. It's not really anywhere, is there, to the downside? The way this is moving today, I think I'd probably go with that, you know. So I'm going to move TP to the downside up to 3R. On the DAX. So I'll be looking to get out on a bounce of that low and the low from yesterday. So this is pre-market data, not real data. So that is the most recent low we've got, which is yesterday's low, which is there. So I'll be looking for an exit when we get to yesterday's low and looking for a bounce play off of yesterday's low to get out of the DAX shorts. So those are the targets. So hedged on both, targets to the downside, targets to the upside, target to the downside, target to the upside. See how we get on. Just no volume today, is there? It's just a rubbish. That's how I feel this week. This week just feels like a load of rubbish. FTMO are two guys from the Czech. They started this prop when they were on university. They are now millionaires. Everybody that runs a prop firm is a millionaire because all they're doing is they're selling you a demo account, which you can get for free from your broker. You will still blow it if you use a 5% drawdown. I use now for 1 month 100 ADR reversal strategy, 5-minute time frame, but I'm thinking of switching to H1M5 mean reversion, 0.25%, 0.15 risk, and half an ADR. Yeah, try it. Backtest it. What's the main advantage and why I prefer H1M5? So the reason I prefer H1M5 over ADR, from a position trading perspective, this is from a scalping perspective, ADR great. If you want to use a stop loss, ADR reversals are brilliant. From a position trading perspective, if you look at where we are today, for example, perfect example here, look, Aussie dollar, New Zealand dollar, we're at ADR. Yeah, so you take a short. Now, RSI has only just got above the 50 level. Yeah, so this is not a bank rally, is it? This is just a move up. Yeah. For RSI to get extended, we are going to need to do something like that. And then we're going to get extended on the RSI. Yeah. So if you look at it, if you got in there short and then you scaled in with a second half an ADR apart when you got a reversal alert, obviously not just scaling in because it gets there, you scaling because there's a reversal. And then it pushes up to here, you're sitting about 175, 200 ADR. I haven't even got in yet. You're in 2 positions short, just about to take your third. I'm not even in, right? And then what it does is it sits there and accumulates, or it flags. And then the following day, it breaks long again and puts in another ADR. RSI gets extended, okay? So we're now up above 80, right? We haven't had a reversal alert yet because market is pushing. We've got another ADR hit. You're at 150 ADR now on day 2. So you've had an ADR rally, and now we're sitting up here. Yeah, you are now in 1, 2, 3, maybe 4, possibly 5 positions. I'm not in yet. Yeah, but what I've now got is the banks have put in a massive bull run. What do they need to do? Take profit. That's why I use H1 RSI, because to get above that level, the banks have got to have pushed and sustained for multiple days, usually on the trot, which means that they are really long, really overexposed, really high on their P&Ls, and they need to break some of that profit out and pull back. So that's the disadvantage of ADR, is if you take an ADR reversal and the RSI is absolutely miles away, you could get massively extended into 5 or 6 positions by the time I'm even thinking about getting in. And then what happens if the RSI gets extended and embedded for 3-4 days because the market is actually just grinding up? You are now in 6 positions. I've just taken my first and I've gone into drawdown. You are now probably in position 7, 8, or 9, and I'm in 1 or 2 because I've waited for the banks to make their move. Yeah, ADR is an intraday strong move by the banks. It doesn't mean it's going to pull back. It means it's got extended. There's been a big bull run. Yeah, it could go sideways. It could flag and then break higher. When the RSI is extended very high, like this, the banks have gone crazy for days. 1, 2, 3, 4 days. Yeah. You've got an ADR hit there. You've got an ADR hit there, probably an ADR hit there. There's 3 ADR hits there, but we didn't get extended on the RSI. Yeah. I got in there and it went into accumulation. Another ADR hit. I took a second position. We pushed up again, pulled back again, pushed up again, probably a couple of ADRs in there. I took a third, first, second, third, out. You got in somewhere here. I got in somewhere here. So you're just taking more drawdown. That's the downside to ADR reversals with position trading. The upside to ADR reversals with position trading is you got in yesterday and you're out with a profit. I'm not, because I didn't get an RSI extension. You did. So you will get a lot of quick in, out profit taking with ADR like this. Perfect example. This was a 125, 150 ADR move yesterday. There was a reversal alert there. You got in on the 5-minute time frame and you're already out with 3/4 of an ADR. I haven't got in. So that's the advantage. Yeah. So when you run ADR reversal position trading strategy alongside H1M5, you will often get the same entry on both accounts, because when you get that final ADR push, it might take it over RSI, and therefore the same reversal alert will trigger the trade. Other times you'll get in on ADRs and I won't get in on RSI. Other times I will get in on RSI because the market will push 3/4 of an ADR sideways, 3/4 of an ADR sideways, 3/4 of an ADR, and that will take RSI to extension over a 3-day period, but we will never have an intraday push that goes beyond the average daily range. I will take an H1M5 mean reversion short. You will never get an entry on ADR reversals. They're different strategies, but it's position trading. Yeah, and this is why I keep saying there is an endless number of ways to get into the market. How you get into the market is irrelevant. You could use Bollinger Bands, you could use a CCI, you could use MACD, you could use a moving average crossover, you could use support, resistance, supply and demand, you name it, you use it, whatever, doesn't matter. How you get into the market with that first position is irrelevant. It's either going to work or it's not. What you do after that position, when it doesn't work, is how you make your money. That is the position trade. Yeah. So if you want to get in on ADR reversals, that's fine. 80% of them will probably work within 1 to 2 positions. The ones that don't, you turn them into a position and you manage them. You don't have a choice because you're short. You just deal with it. Yeah. But just be prepared that you might go into more drawdown using ADR reversals than you will using RSI. However, I am sitting here at the moment after over a week with 3 positions on and no exposure because I can't get into the market. Because there aren't any RSI extensions. I have no setups. I have nothing to trade. ADR reversals, we've had loads. Every day there's been an ADR this week. And every day last week there was an ADR. So you, with ADR reversals, would have taken tons of trades. Some of them will have worked. Some of them won't. I don't know because I haven't been doing them. Yeah. So that's the difference. There's no right, wrong. It's different. Everything is different. There's nothing better than anything else. ADRs are better when the market is contracted and rangy. RSIs are better when the market is trending and squeezing. Which is it going to be in January? I have no idea. Which is going to be the best one to trade? You tell me. I don't know. The banks don't know. ICT with his interbank price delivery algorithm doesn't know. Nobody knows. So pick one, use it. Or pick 2 and use both. I don't know. Up to you. But that's the answer. I can't give you anything more accurate than that because I don't know. What's the main advantage? I just answered that one. That's the question I just answered. AJ Birch, it's not just MT5. All these new developers make every site that is so heavy and bugged down these days. Yeah. It's technology. And just wait until AI gets involved. That's going to be fun. I think what was somebody saying the other day on the news? I can't remember what it was. Oh, yeah, it was the post office. You know, in the UK, we've had this post office, this program where all the postmasters all got sued because they introduced this new Horizon system into the post offices where it just decided to inject cash that didn't exist into their systems, and then it looked like they'd stolen it all. And someone was saying, if 20 years ago we were making software that could go wrong, and now we're programming AI to take over the programming of the software that could go wrong with human beings, what the hell is AI going to make a mess of in the future? It's really going to screw something up at some point, isn't it? And then you've got people like our friend Greg Secker now selling you AI trading systems. Good luck with that. If you buy from MT5 by mistake, you can get a refund if you haven't put it on a chart yet. Yeah, so if you buy an indicator from MQL5 Marketplace and you've bought it for MT5 and you wanted it for MT4, as long as you haven't installed it and activated it on MT5, you can get a refund on it. As soon as you activate it, you've used it. They're not very friendly, MQL5, unfortunately. What about the yen pairs? So we're waiting on the yen at the moment. So this year, we are going to change interest rates on the Japanese yen. The yen interest rates are on the 23rd. Yeah. So the Bank of Japan rate will change on the 23rd. They've held a negative 0.1 rate for 7 years now. 2016, nearly 8 years. It is 8 years. 8 years we've been on a negative 0.1 interest rate with the Japanese yen. Yeah, never changed. This year, they are going to change that rate to either 0 or 0.1. So it'll be the first time we've had positive or neutral interest rates from Japan. So they're basically changing their entire monetary policy to work the same as the Western world, basically. So the way that the Japanese work at the moment is, instead of using interest rates to curtail inflation and control their currency, they use overseas investment. So every single penny that comes into the Japanese economy gets put into overseas bonds and investments. Therefore, whenever they need to rally or inject cash into their economy or into their currency, they liquidate those overseas exposures in bonds and things, and they buy back the yen, and then the yen rallies. So that's how they've always controlled it. They're moving over to the way that we do in the West now, which is we control inflation using interest rates. So we curtail and encourage spending using interest rates to make people poorer or more wealthy. Same with businesses. So that is the first time it's going to change. They've said it's either going to be January or February. So the yen, when that interest, and again, I have no experience of positive interest rates with the yen in my professional trading career. When I was trading 10 years ago, we had different rates with the yen, but I didn't pay any attention to any fundamentals back then. So I've no idea really what impact it's going to have. Historically, you would expect it to power up the yen. So every single yen pair should drop. Yeah, because we only cross against the yen. So when the yen powers up, everything against the yen drops. So US dollar yen will drop, pound yen, Aussie yen, everything will come down. When that interest rate announcement happens, or when they tell us it's going to happen. So you're better off being short everything against the yen at the moment, assuming that the Japanese do it. However, the Japanese have and this is when they sort of announced, we're going to do that. So it's basically when we got back to that 150 level again, and they said, if you don't stop, we're going to intervene and we're going to scream price down anyway. So assuming they do it, we'll be looking for shorts. When they'll do it, don't know. So at the minute, looking for shorts. So any RSI extensions to the upside, any ADR extensions to the upside, drop down M5, wait for the reversal alert, and short. Or M15, whichever. Yeah. So you've had a reverse alert on it this morning there. So yeah, everything at some point down. But again, we have to wait. Outro's off to work. Have a good day. Thank you. Understand now. So I will switch to H1M5 mean reversion. Ideal RSI would be 70-30. There is no ideal. Nothing is ideal, Michael. You've got to get this best out of your head. Nothing is better than anything else. It's different. The 70-30 RSI extension is different to the 75-25. Yeah. Which is best to use depends on how the market reacts when you get there. Yeah. Use this as an example. All right. Which is the best RSI extension to use here? I have this red line on the 75-25. Which is the best one to use? Yeah. Here, the 70-30 was the best to use. Actually, no, it wasn't. The 75-25 was the best to use. So here was your entry on the 70-30. Here was your entry on the 75.25. So in that case, the 75.25 was the best one to use. Here, can't see it. Let's use this one here. Here, the 70.30 would have got you into a trade short, and it would have screamed up against you. So the 70.30 wasn't a good one to use there. Was the 75.25 the best to use there? No, because it never hit 75.25. So neither of them were any good there. Here, the 70.30 was the best because the 75.25 didn't trigger the trade, and you missed that, so you should have been on the 70.30. Here, the 70.30 wasn't as good as the 75.25 because the 70.30 got you in here, and the 75.25 got you in here. That was much better than that. Which is better? Depends what happens when you press the button. Yeah. Sometimes the 70 is better. Sometimes the 75 is better. Sometimes you shouldn't have taken the 75. You should have left it to the 80. There, the 80 was the best. There is no right. There is no wrong. There's just a different way to get into the market. It's not about which is the better one to use to get in. The better one to use to get in is the one when you get in, it goes your way. You can't know that because here at the hard right edge, you don't know what's going to happen next. So is this the better one to take, or should I wait until there? I don't know. Have you got a crystal ball? I haven't. Just use one. Get in. Deal with it. Deal with what happens after. You make money by managing your position. You don't make money by getting your entry correct. You'll get your entry correct a percentage of the time. That percentage will vary depending on what happens when you press the button. Sometimes it will go up. Sometimes it will go down. Choose one. I prefer the 75.25 because I'm risk averse. Right now, I prefer the 70.30 because I haven't got any bloody trades on. But if I switch now to 70.30 and the market goes parabolic, I will be sitting there going, I wish I'd have stayed with the 75.25. In fact, I wish I'd have changed to 80.20. But I'll only know that after it's happened. But I'm going to introduce ADR reversals into my portfolio as well, I think. I've decided. I just want to diversify my risk a little bit. So, with ADR, I'm in Aussie New Zealand since the 3rd of January. Got 4 trades on, and now it triggered a short on the Aussie dollar New Zealand since the 3rd of January. So with ADR, so you've hit ADR, gone long, scaled into how many? 4? Yeah. And now you've got an ADR short on. Yeah. Because you've got an ADR short, haven't you? But no exit on the longs yet. So one or two things is going to happen here, isn't it? It's either going to come down, in which case your ADR short is going to make profit, or this reversal alert we've just had is going to form support and you're going to get a reversal back up into propulsion, in which case then you will be getting out of your longs from January. You're only 1, 2, 3, 4, 5. You're only 6 days into the trade. Yeah. This is a prime example of ADR. Yeah. This one, you took an ADR long here, right? Has this triggered RSI? No. This is the difference between ADR reversals and RSI extensions. ADR is an intraday move. That intraday move does not mean the banks are extended. It means the market's dropped for a day. That's all it's telling you, is we've gone beyond our normal range for the day. It could be the start of a move which continues for a week. RSI is a continuous relative strength move from one currency against another. Therefore, if it's moved for a period of time in one direction, you know that this is part of a move the banks are making long term, which will need to be profit taken by part of the volume in there, which is why we get market structure pullbacks. Yeah. But there's nothing wrong with that trade. Yeah. So you got in on ADR reversal. It didn't work out. You took a second position, still hasn't worked out. It's now a position trade. Manage the position, wait for the pullback. That whole move there hasn't had a pullback yet. We've got propulsion targets to the upside. This propulsion target looks like it's holding. If it does, it's going to push back down and retest this level here. And then it's either going to bounce back up there or it's going to push down. If it pushes down, look for the next level to scale in and wait for that pullback. It will pull back. Just got to wait. It's the job. That's why we use low risk. Do you think it's a good idea if ADR is in a squeeze to switch to H1M5 position? You're already in it. There's no such thing as switching. A position is a position. How you get into the position is totally irrelevant. A position trade is where you take a trade for any reason whatsoever and you scale into that position. Yeah. You don't scale in different on ADR reversals to H1M5. You still scale in half an ADR, 3/4 of an ADR, and ADR apart. No difference. If I'm going to introduce the ADR reversal strategy into my trading, my positions will be spaced 3/4 of an ADR apart. Exactly the same as H1M5. I'm just looking for more triggers because I'm not getting triggered. There's no difference. It's exactly the same thing. A position trade is a position trade. If you use a Bollinger Band extension to get in short and it goes long, you are in a position trade. You haven't used H1M5. You haven't used anything. You've used a Bollinger Band extension. You're still getting into a position. Position trading is about managing multiple trades within a position in a direction. How you get in is irrelevant. You don't change what you do because of anything. You are in a position. It's a methodology, a way of trading. Can you also go over the main advantage of the SIH EA over the ORB? That's all covered in the video. Let's go and watch the video on the SIH strategy on the website. God, my website is so slow in the mornings. Basically, the main difference between SIH and ORB is SIH only takes one trade. Yeah, I'm only in one trade. Hedged at the moment on both, but there's only one entry. I will get out today of this entry. That's it. ORB, you will get into multiple positions depending on what the market does. Multiple trades. Because you're using a stop loss. You're getting stopped out, aren't you? So the difference between ORB is if they're... So ORB, basically, you're using the same strategy, you're taking a break. This is why I like SIH more than ORB personally. Look at today on the DAX, right? This is a really good example, actually. I might as well use this because it's absolutely perfect example of the difference between ORB and stock index hedge. There is your range. Yeah. Stock index hedge. Went long, went short, I'm in. I'm waiting for the market now to make a decision on where it's going to go. And when it's made its decision, I will get out when it gets to a resistance or a support level. Yeah. One trade, wait. ORB, long, stop loss, triggered short, stopped out, -1R. I've gone short, stop loss at the high, pushed up, stopped out, -2R. Gone long, in drawdown. I'm 2R down, and I'm now long. That's the opening range breakout. Yeah? So I've taken 2R loss today. Now, what if this pushes down here and stops me out? I'm going to go -3R. And I'm going to go short with a stop loss there. If it then pushes down and TPs me down there for 3R, I make 3R back. Tick. I'm break even on the day. But what have I gone through? Psychological hell, death by 1,000 cuts, and I haven't got any more advantage because I haven't made any money today than I have with the stock index hedge. Stock index hedge is in. Okay, well, we'll just chill and wait. What's the worst case scenario? 1R loss. Wait. You tell me where you're going, Dax. When you've made your mind up, I'll play with you. Until then, do what the hell you like. If you want to sit there and do that all day, fine. I will shut you out before the New York Open and I will take that $260 loss. Everybody else will have gone long and short 10 times and be 10R down on their accounts. That's the difference between SIH and ORB. However, on the days where you get a nice clean break, they are both exactly the same. Yeah. ORB on a clean break day does the same as the stock index hedge. You get the break, you take the money, you walk away and you do something else. The difference is exactly as I just explained, hedging is just one trade if you get hedged. If it doesn't work, you sit there and you wait. With the ORB, you have the ability to make more money if the market does move straight after that initial break has gone wrong. You'll be good. You'll be in profit. So let's say, for example, we broke long. That didn't work out. So we stopped out on the long, -1R. And then it broke short, pulled back, and went into a trend down to 5R all day. Yeah, you would make 5R plus probably another one in the middle there. So you probably make somewhere in the region of 3 to 4R. If it went fake out, break. That's the advantage of the ORB. The SIH won't get that. Again, nothing is better or worse. It's just different. It's a different strategy, different methodology. It's not any better or worse. Some days ORB is better, some days SIH. Today, SIH is the clear winner because I have 1R on. If you are ORB, you are -3R so far today. And the day's not over yet. If this crashes down, you're -4. If it then pushes up again, you're -5. If it pushes down again, you're -6. If it pushes up again, you're -7. I'm -1. So the days where you get this no volume crap, I haven't got a clue where I'm going type day, the ORB is not good. But what happens if you get 5 days on the trot where it goes up, fakes out, and then every single one of those goes down between 5 to 10R? ORB will clear up. You'll be 20R up. Stock index hedge will be -5R. Yeah, which is better? Don't know. Depends what the market's going to do. What's the market going to do? Don't know. Haven't got a crystal ball. Yeah, different. It's all it is, different. You pick what's comfortable with you. Trading is all about finding your comfort zone, your comfort level. What clicks with you? What do you like? What don't you like? What psychologically sends you over the edge? What doesn't? You've got to discover that yourself. And the only way you'll do that is by trying different strategies. You have to try stuff, see what works, see what you like. I love this strategy because I can sit here now and go, worst case scenario today, I've got a $500 loss. That's the worst thing that can happen. Yeah. The best thing that can happen is it pushes up to here. That's going to close out at about $600. I'm then going to get the EA to automatically get me out on $150. So the worst case scenario today is -$500. Best case scenario today is we do get a rally up or down on both of these, and I'm going to come out with +300-ish. Those are the two scenarios I have for this morning session. Nothing else is going to happen. That's what I like, controlled risk. Yeah, if you're the sort of person that goes full tilt when you get stopped out 3 times in a row, ORB is not going to be for you. This is going to be brilliant. It's going to solve that overtrading problem that 90% of traders have. Yeah, you take a trade, it goes, you get a full signal. So you go long on something, and then all of a sudden it gives you a whacking great shooting star, and you're like, oh crap, I'm going to get out of my long with a break even. I'm going short. And then what does it do? Pushes up, stops you out, and you go, oh, I wish I'd have stayed on my long. Okay, well, when it pulls back, I'm going to go long. So it breaks out of that high, then comes back down and breaks that low, stops you out. Now you're 2R. Shit. Okay, I'm going to double this time. Where shall I go? Don't know, because it's just been doing that. I'll wait for a break of that range. Yeah, it's broken that range. I'm going long, stop under there, pop. Now I'm a 4R because I doubled my risk. If you're that type of trader, stock index hedge fixes it, because you don't do that. You wait. Wait for the market. Which way is this going at the moment? It hasn't gone anywhere yet. We're an hour into the session. We have literally just broken out the pre-market range by that much. There is no direction. Therefore, there is no opportunity. So you wait for the opportunity. The opportunity is when this has moved, they will profit take it. We wait and we get on their profit take move. We revert it. Because the breakout didn't work. There's 3 types of trading. You've got ranges. You've got breakouts. And then you've got trends. That's all there is. Yeah. We try and trade the breakout. If the breakout fails because it hedges, we wait for the mean reversion opportunity. There is only 2 things it's going to do. It's going to do this all day, or it's going to get on a run. And when it gets on a run, we get out of it. Patience. DAX, look, absolutely nowhere. You can't trade this. If you're trying to trade this right now, the market opened, it went up and it went down. You saw that bearish engulf and you went short. Immediately they had it put an inside bar in and it pushed down and put a bullish candle, pushed down and put a bullish candle. If I was that person, I would be going, screw this. This isn't bearish. I'm getting out. So I'm going to take a small loss, half R, and I'm going to flip long. But I'll wait until I get some bullish price action. Bang. Okay, brilliant. We're going long. Stop's going to be underneath that low there because that is the low point of the session so far. Oh, crap. Minus 1.5 R now. Okay, so looks like we're going short. So let's jump in short. Oh, crap. Minus 2.5 R. Okay, well, looks like the market's now going long. So I will go long. I am now long. We've pushed down inside bar, pushed up, and we're still sitting there. 20 minutes has passed. I'm still at break even and 2.5 R down. Sound familiar? And I'm also fuming mad and cross because I've lost 2.5% of my account. I've only got a 5% daily drawdown limit because I'm trading prop. Now I'm in trouble. If this one goes wrong, that's going to put me on minus 3.5 R. I better stop trading for the day. I can't stop trading for the day because it's prop. I've still got 1.5 R I can use. I tell you what, I'll put the whole 1.5 R on the next trade. One session, blown account. Yeah. Stock index hedge stops, all of that happening. I'm in it. That's it. I'm waiting. See what the market does. DAX is broken long. Yeah. Where's DAX going? It's going to test that level or that level. If it tests that level and bounces off of these lows, I won't get out. Worst case scenario, I can lose that. If it comes and retests yesterday's high or the previous day's high, and then we find limit orders triggering to push the market down, I'm going to have a profitable morning. Those are the outcomes. I don't know which is going to happen. So you wait, sit, wait. We just had an ADR on Aussie dollar yen. So pushing up again on the Aussie yen. This is yen weakness. All yen pairs pushing up. So we've got a weak yen. No news. So it's just market pushing. With how quiet the markets are, I genuinely feel like flipping a coin on a 4 or 5 charts and just managing the trades from there. Yeah, do it. You've got just as much chance as anything else flipping a coin at the moment, really have. But flipping a coin is great, which is a 50-50 chance. But if US dollar yen rallies up today and hits that level and gives you a reversal alert on the 5-minute time frame, that has got more chance of working than flipping a coin. So you're better off just waiting. Just scan through your charts every like 2-3 hours and go, right. Or set an alert. Yeah. So just set an alert there. Just go alert. Bang. Done. If it gets there, I'll have a look. If it doesn't get there, I won't. Use support resistance. Use levels to get into trades rather than flipping a coin. It's frustrating as hell. I know. This is the hardest bit of trading, sitting on your hands while the market isn't doing anything. Because you like, right, I'm going to use a different strategy because it's not working anymore. That's it. RSI extensions are no longer working. 2 weeks' time, we'll replay this when the RSI is lit up like an absolute Christmas tree because there's been an interest rate change. And we'll go, glad I didn't trade ADR reversals. Oh, if only we had a crystal ball. Morning, Harold. Started running a new EU test with the ORB this week. Instead of using the first 4-hour candle like before, I'm testing 5 p.m. EST to midnight, covering the whole Asian range. Good. And that's basically 5 p.m. EST to midnight, the Asian range. Yeah, so that's the London breakout strategy. You're basically trading London breakout. Doesn't work, London breakout strategy. Continuous mode on ORB can be a nightmare on a choppy open, yeah. But on the flip side, it tends to catch news moves very nicely. Yeah, it will do. Anything will catch a news move if you're the right side on it. And you can get your order on, obviously. What did you say about the yen and Japanese government? I'm on the wrong side of this Swiss yen. No, at some point they are going to increase their interest rates, the Japanese, that's all. So when they do, the yen will power up. But we don't know when. Yeah, I mean, this yen could drive up for 3 weeks. Everything could go. The yen could be weak for the next 2 to 3 weeks, and all yen pairs could rally for weeks. We don't know when it's happening. And like I said, we don't, we've had a reversal and retest here. Market structure is bearish, looking good for shorts. But right now it's rallying. If it breaks that high, there's a good chance it will come and retest that. Don't know. But if the Japanese, if Ueda comes out this afternoon and says, we've decided we're going to increase interest rates on January the 23rd, this thing's coming down 200 ADR plus. You can't sit here and not take a trade because something might happen in the future. If you've got an inkling that something may happen in the future that is highly likely to drive it in one direction, you could just take trades in one direction. But again, only when you get a signal, when you get a strategy tell you to do it. At the moment, there's no yen pair telling me to short it. Right now, I'm in two, and they're not working out at the moment. I'm just sitting in them waiting. But I am the right direction. I'm comfortable in this. If this pushes up now, this pound yen, yeah, where's it going? It's coming up to here, 175 ADR. It's fine. I'll take a couple of positions. When the Japanese increase the interest rates, I'll get out. Or this is a triple top retest. If it bounces from there, happy days. It doesn't matter, does it? If it pushes and accumulates and pushes, I'll wait for the next train. That's how I teach it in the bootcamp, isn't it? It's like waiting for a train at a station. I'm sitting at this station at the moment, waiting for the train to go that way. If I get on the train and the train goes that way, I have to get off the train and get back on it and hope the train goes that way. If I get on the train again and it goes that way, I have to get off, get back on, and hope the train goes that way. At one point, the laws of averages mean that the train is going to go my way. That's when I get out. I have no clue when it's going to happen. Patience. What did you say about the... oh, yeah, so that's that. How many months would you say a person has to be in the green before they're considered a profitable trader? 3 months. Consistently, you could be lucky for a month. You could be lucky for a couple of months. You can't be lucky for 3 months. You've got something. And it's not the strategy, it's you. You've figured out what you've done wrong, and you've eliminated all the stuff you've done wrong, and you suddenly realized how to do it. And you will do it for 3 months. Once you've done it for 3 months, you've been consistently profitable for 3 months. Your next goal is then to put 3 months worth of money in the bank that you will pay your bills, your mortgage, your food, and everything. So if you spend £5,000 a month on mortgage, bills, food, entertainment, going out, everything you do, you need $5,000 a month for that. You put 15 grand in the bank, because as soon as you flip that switch and go, I'm a trader, the first 3 months could go wrong. You've just had 3 month run. Probably going to get a down month at some point. So you need 3 months worth of money in the bank. So when you've been consistently profitable for 3 months, trading the same strategy, which you will have been, because if you find something that works and it makes a profit, you don't stop doing it. If you do stop doing it, you're stupid. If you find something, you pick up a new strategy and you trade it for 3 months and all of a sudden you're not losing money, you're not going to stop doing it, are you? Yeah. So if that happens and it keeps happening, something's clicked. What you've probably done is you've realized all the problems you've ever had in the past and you've moved on to stage either 4 or 5, depending on whether you were there or not. Yeah. And you're just doing what works over and over and over again and waiting for the market to pay you. Yeah. You spend your entire life here waiting for that system, strategy, light bulb thing to be eliminated. Whatever the problem is you've got, there's a billion of them. Nobody knows. Everybody's got different ones. Whatever they are, you're sorting them out here. Then you get to the point where it works. And this is the danger. And this is why I say you need 3 months worth of money in the bank. This step is the one that kills everybody. Walking on water. This is where you've had a month and you've made a profit. Yeah. And then you've had a little dip and it's done that. And you've gone 2 months, 3 months, double my lot size. That is the month you have a losing month. You wipe out all of that. Yeah. And you drop from there back to there. Yeah. So you find the strategy that works. You make it work. You get cocky. The market kicks you in the arse and goes, I'm in charge. You're not in charge. And then you go, get it. Right. Okay. That was working because the risk was low. When I upped my risk, it went wrong. Go back, do that, keep doing that. Autopilot. That's why you need the money in the bank, because most people get this stage and they get kicked back from it. I did twice. And it's usually that will be the last account you ever blow. You will never blow an account from there onwards. That's trading. So you need the money in the bank, but you've got to have that run. You've got to get that. You've got to find what works for you. And it is different for everybody, which is why I keep saying, which is better? There isn't a better. Some people love the 70-30 RSI. Some people trade 60-40 hourly RSI reversion on they take the hourly reverse alerts after a 60-40 hourly RSI extension. It works sometimes, but it's not about what works. It's not about finding the indicators. It's finding out how to manage the money after the move's gone wrong. That's the thing. That's the bit that fixes you. That's where you get the run, if you like, into profitability. And then once you've got autopilot, put as much money as you want in because you know what to do. You're not worried about pips. You're not worried about strategy. You're not worried about anything. You're worried about drawdown. How can I control this and let everything that works go here? How can I manage this? This is a percentage of my account. If I'm trading 1 million or 1,000, 1% is 1%. The amount of money you have in your account is irrelevant. The percentage is what you concentrate on. This is what makes you the money. As soon as you click that and realize that pips are irrelevant, ADR is king, money is irrelevant, percentage return is king, as soon as you get those two things, you suddenly get it all. It all works. So I keep going on about ADR. Everybody gets it wrong. Everybody tries different strategies, tries different instruments. It's like people saying, can you use the opening range breakout strategy in Forex? No. Why? Because it's the opening range breakout strategy. The edge of the strategy is the opening range breakout. There is no open on the Forex market. There is a disconnect. I've got a strategy which makes me 600 pips a day. What on? 600 pips a day is totally different on Aussie dollar CAD and pound yen. Yeah, Aussie dollar CAD moves 57 pips a day. That moves 163 pips a day. Yeah, you need a massive move on that, a 3 ADR, to even get to 1 ADR on that. How can you use pips? You can't. You have to have these constants. When you learn what constants work for you, that's when you'll make it. Got to try it all. Just got to try it all. There is no shortcut. But if you do what I do in the bootcamp, you'll cut out 90% of the crap. 90%. Probably more. Thanks for subscribing, Chong. Welcome aboard. I'm on month 5 of live position trading H1M5 green every month. All because you're a genius teacher. I'm not a teacher. Well, I suppose I am. I'll take the genius part. Yeah, green every month. That's brilliant. But I've been through it before. Look at my months from last year. Let's count them. Look, green 8%, green 3%, green 16%, green 3%. Is that April? Yeah. Green 19%, red. So one red. 9.7% down. That June. Green 25%. Green 6%. Red 8.1. 2 months loss. October. Green 22%. November. Green 13.4. And December was green on 5%. Yeah. 10 profitable months, 2 losing months. Yeah. That losing month is coming. There is no one on the planet that is not going to have a losing month. This is why prop doesn't work. You are going to have a losing month. The problem you have is those, like Azzy's just said, 5 months, live position trading, green every month. I had 5 in a row, didn't I? Just accept the fact you're having a 10% loss coming. Yeah, if you're ready for it, you know it's coming, you'll get through it. If, when you have that losing month, you lose faith in the strategy, you have to remind yourself, you just did this for 5 months. What's changed this month? Nothing. Is the market volatility the same? Yes. Has things been trending? Yes. Have they been ranging? Yes. Have you just got onto the wrong pairs at the wrong time? Yes. Will they correct themselves? Yes. That's the hardest bit, is getting through that losing month. You're going to get it. It's happening. I'm going to have 2 of them this month, this year. I always do. I don't know why. It's always 2. And it's never the same bloody month either. Never the same month. December 2022 was a losing month. December 2023 was good, 5% profit. But December 2022, I got squeezed on US dollar Swiss. This year, I didn't. No idea what's going to happen. It's just going to happen. You know it's going to happen. Experience, that's all it is. Autopilot. Part of your P&L. Your P&L is going to go like this. Yeah. You're going to get 2 or 3 of those a year. Deal with it. Nothing you can do. And 90% of the time, one of those losing months as well, actually, last year, one of those losing months last year was because of oil. Yeah. If I hadn't have traded oil last year, I'd have had 11 out of 12 because I got cocky on oil. Speaking of getting cocky, Brian, getting cocky is spot on. Back in 2014, I had 5 rental props, sold 4 of them, and dropped the cash in the market. Got my ass kicked and revenge trading ensued. Should have just gone to the pub. Yeah. I would always say the same thing. Never think you're safe in this market. Never think you're safe. You will. This thing could blow your account at any moment. When you have money in a broker, assume that that money is gone. Yeah. It has to be money that you can afford to lose, which is why I say you need 3 months' money in the bank to spend, and you're going to need your capital. Yeah. So if you want to trade with 50K, you're going to need 65 grand in the bank, because you need 50K for trading. You need 15K in the bank in case trading doesn't work. Because if trading doesn't work, you've got to pay the bills for 3 months. And in month 3, you're probably going to be looking for a job again. Not a nice job, is it? I never sell this job, do I? It's funny. I come in here and I do this job and I don't actually promote anybody doing it because it's the hardest job in the world. It's the most satisfying thing in the universe. I love it. I couldn't do anything else. But it's not a fun job, is it? I'd much rather be flying a plane, being paid 60 to 80 grand to fly a plane, or 100 plus to do this. I'd rather take the 60 to 80 and fly a plane. Less money, more fun. I can't fly a plane though. My eyesight's not good enough. So often the only reason the month ends up red is because one squeeze. No, well, it's not always just one squeeze. No, I mean, sometimes, look, this month, look, I'm on 1.9%, right? Can't get any risk on because there's nothing moving. So this is the only downside to mean reversion. You can't mean revert something that hasn't moved. You can only mean revert something that's moved. If something doesn't move, you can't mean revert it. So it's the only downside to it. But not often you have everything flat, is it? I mean, this RSI is, I mean, if you go back and look at all the live rooms from the last week and a half, this thing's been white virtually every session. There's nothing moving. So there's nothing you can do. But I'm on 1.91% here. This could turn into a losing month very easily. Let's say the Japanese come out and go, you know, we said we were going to put our interest rates up. We've decided actually to buy a load of US bonds instead. Japanese yen's going to collapse through the floor and it's going to hit 152 on the US dollar yen again. Yeah, this lot is going to suddenly dive into 6 to 8% of drawdown. My choice is, do I cut some or not? If I cut anything more than 1.9%, I've had a losing month. I don't know what's going to happen. It's harder to make money when there's nothing moving, obviously, but not because nothing's moving, there's no opportunities. Also because you end up doing stupid things. And this is why I keep saying to everybody, if you're going to run multiple strategies, have multiple accounts. Never take a trade in this account that is not H1 M5 mean reversion based. So I can measure 100% what this is. If you start going, this isn't working, I'm going to start taking support resistance trades. If this pound yen puts a bearish engulfing in, i.e. we get a reversal alert on the 5-minute time frame here, I'm going to short it. My strategy data is now wrong. When I analyze my performance, I've got a support resistance bounce trade in my H1 M5 mean reversion account. So if I want to take this, and I'm thinking about doing this as well, it's just setting up another account just for support resistance, for position trading it as well. But I'm doing this because I'm bored. And that is the bit that leads to you going wrong, because you've got a strategy that's proven. I know support resistance works. So if this does put a reversal alert in, there's a good probability we'll come back and retest this level. There's also a good possibility that we might push back into that propulsion and bounce out. But I can get out of that, can't I? Want to? But you've got to make sure you segregate everything and just don't jeopardize what works because of it's just not doing it at the moment type scenario. Look at yesterday. SIH didn't take any trades yesterday morning, and this morning both of them are hedged. Am I not going to trade SIH anymore because I've had a day where we didn't take a trade and 2 days where I've hedged and locked in loss? No, because I know this happens. It happens all the time. You just got to get through it. This crap. Every job's got crap in it. This is the crap bit. Low liquidity, whippy crap. There's nothing to do about it. It's part of the job. Identify it, deal with it, move on. Tomorrow we'll get a 7-hour rally and I'll bank $600. I don't know what will happen, but it could do. Just coming up to DAX target look. So we're not stopping on this at the moment. So we are getting quick pullbacks and rallies constantly. So nice trend forming. So what I might do is just slide this TP up ever so slightly, just up to the previous day, because it's a very strong move. And I don't want to just take profit because of a level. I want to wait for some reaction there. So what I'm going to do is I'll just move the TP up just above yesterday's high. So if we get some kind of bearish price action forming, I'll get out. If it hits that, I'll get out anyway, but I want to watch price action. I want to see it stall. It's not, this is a big rally at the minute. Got loads of room on the DAX, on the FTSE, so I don't think I'm going to get out of that one today, to be honest. So often the only reason the month ends is red, yeah. DAX almost at the highs, yep. So watching this level, I'm going to just set a little alert there, actually. Just to remind me if we do hit yesterday's high, because I want to watch, because you find limit orders at highs and lows. Yesterday's high, there will be sellers. We know there's sellers there because we pushed up and we sold away from it. That's what a high is. It's an area where the sellers took control. A low is the area where the buyers took control. We know the sellers there. They were there yesterday. They'll be there again today. How many of them will depend on how many buyers we get when we get there. So whether it pushes away will depend on the seller buyer bias when we get there, won't it? So we'll wait and see when we get there, but I'm going to get alerted when we do. And if we start to get signs of retracement, I might jump out the longs. Got to get there yet though. Right, that's all I've got for you this morning. So this morning I'm going to set up that 30k I've got spare. I'm going to pop that into another account. And trade ADR, stick the market reversal alert EA on, same risk, 0.1%, but I'm going to use ADR reversals. So I'm going to get that account set up this morning, so I can start trading that just while this market is quiet. But ADR reversals, yes, last year did fantastically well. It had a lot more down months than H1M5, as you can imagine, because it got squeezed a lot more. But I'm going to use it exactly the same as I do with RSI. I'm going to do manual drawdown control and manual targeting. So it's literally just going to get me into positions and I'm going to decide when to get out. The other thing I'm contemplating doing at the moment, because obviously I'm not going to do this hedging strategy right now, which is what I wanted to do for diversification. What I might do is set up another account with maybe a smaller amount in it, just to trade support resistance. So if you go back to the bootcamp and watch the bootcamp, when I recorded the bootcamp, I was trading everything manually. The EA was in development at the point I was recording the bootcamp. So what I used to do and what I teach in the bootcamp is taking trades for a reason, and obviously it's RSI is king, but taking trades for a reason and then obviously looking to scale in. So with my support resistance strategy that I used to trade on prop, it was all about monthly and weekly levels. Yeah, so here I would be shorting. Yeah, with a stop loss, and the stop loss would be half an ADR. So what I'm looking potentially to do is just set another account up where I will basically, when we get to a support area like this, I will basically whack the market reversal alert EA on and say short the next reversal. So we're either going to hit that, bounce off of it, we're going to extend above it, stop run, and then come down. And if that trade doesn't work and that resistance doesn't hold, we'll look to get in and scale into the next resistance and scale out on that move. So it's another entry mechanism, not using RSI, using support resistance bounces. Yeah. So as you can see here, we have had RSI extensions on the support resistance bounces. So that one there. Yeah. So, but we are struggling on RSI at the moment. And I noticed this towards the end of December. It was tough, wasn't it, to get RSI extensions? Market's really contracting. And I think it's only because we're waiting for these interest rates. But this could be 3 months before we get some interest rates dropping. And I don't want to sit here trying to shoehorn 5% out the market position trading. So I'm just going to diversify my risk. And this is what I wanted to do with the hedging strategy. But I think I'll just diversify it into normal support resistance and RSI and ADR for the minute. ADR proved itself last year beautifully. Can't remember what it made. This was the full automated version using drawdown control as well. So this isn't ideal. This isn't optimized at all in any way, shape, or form. Come on. So yeah, this made 69% return from March to December. So 9 months. So this made 68% in 9 months, full auto, every pair. So I have total faith in it. It's the ADR reversal strategy. So it's just the kind of the more risky RSI, isn't it? So so I think I'm going to run that this year as well. Certainly to start with, and then we'll see how the year goes, because I've never traded through an interest rate drop before. So I've no idea how squeezy it's going to be. It worries me that it's going to be very squeezy. So I don't want to put too much risk on, but at the same time, I need to get some risk on because at the moment I'm struggling. So hardest thing to accept in this biz is when you're wrong, you're wrong. Even if everything aligns on your criteria, it doesn't mean crap. Yeah. Thick skin, pick the pants up from the bootstraps, move on. Yeah. This is what worries me with this generation. I'm probably going to offend a load of people, but I don't think there's too many people in here that are of this generation Z. But my God, wrapped in cotton wool. Somebody sneezes near them. I'm going to get COVID. I'm going to die. No, it's a sneeze, mate. Just like, how the hell are you going to put risk on the table? But what if it goes wrong? It goes wrong. They've never been punched, have they? That's the problem. I think at school you got punched a lot. I did. But at school we used to get into fights and stuff. School nowadays, they don't have fights anymore. They shout at each other or go... They're never going to be able to trade, are they? Thick skin. It's paper thin, isn't it? You poke them with a matchstick, they bleed. So I've got 2 of them, so I can say this. I have 2 kids in the teens. So, yeah. But, yeah, thick skin. You definitely need thick skin in this job. That is for sure. Interesting pullback on the Dax and the FTSE, is there? Yeah, that could well just be a pullback, though, into propulsion. Look. Could be. And this is what trading's about, Rajiv, isn't it? Yeah. The reason trading exists, the reason the market exists, is because you just said that. You just said interesting pullback on the DAX, which means that you're thinking of shorting this. Yeah. For you to short this, there has to be somebody taking a buy order on the opposite side. Yeah. Whether this goes up or down has nothing to do with your opinion or my opinion. It has to do with the volume of bank orders buying stocks in the top 40 stocks in Germany right now. Nothing else. That's what makes this trade work or not work for you or for me. How you deal with that after you've pressed the button and we've exchanged our contracts is how you make money, not by going, there's a bearish engulfing, I'm shorting the DAX. Yeah. Difference of opinion. That's why it works. So I see this as, yes, it could be a continuation long. Yes, you could be right. I have no clue. I hope it's becoming clear. I come in here every day and say, I haven't got a bloody clue what's going on. I have no idea which way this market's going, except I extract money from it. Yeah. The whole purpose of me is to prove to you that I don't know what's going on, and yet I can show you a positive P&L at the end of every month. Stop looking for a strategy that works. Just get in the market and wait. It's the only thing you can do. You are either right, Rajiv, or you're wrong. Hopefully, you're wrong. Because I want this to go up to here. And then I want you to be right. I have no idea. I wonder if this is 25% pullback before it continues. Yeah, 25% pullback of what? And where'd you get 25% from? Where'd you get that 25%? That's interesting. We don't use 25% on a fib or anything. God. Fibs 23.6 and 38.2 are standard fib. Nothing to do with 25. Could be a 25% pullback. Could be anything. Was that on every pair? Yeah. So that the ADR reversal account, yeah, that was trading every pair. Risk on it was 0.2, so slightly higher risk than the RSI account that I run. But I was paying absolutely no attention to drawdown, so I didn't care because it was just running so that we could see all the trades taken. It wasn't, but it did 68% return on 0.2 risk, so it would have done 30-something% on 1.1. But this is closing out every trade at a specific level. Look, so it would close out everything at a 0.25% profit. And a lot of those you would have got much better than 0.25% out of it. Distance between orders was ADR, and it was taking trades at 100% of ADR. I personally would run it at 125. Or should I run it at 100? I don't know. I haven't really decided. These are the decisions you have to make. It doesn't matter. If I run it at 100 or 125, I still don't know what's going to happen in the future. So it's just I like things to be a little bit more stretched. The more stretched it is, the more chance you've got. Look at ADR. Yeah. There's a 42% chance it goes beyond ADR, which means that 58% of the time it doesn't. There's a 23% chance it goes beyond 125. That drops by 50% on 1/4 of an ADR, because most of the time the market stays within its average daily range. When it extends beyond it, the odds of it going much further than 125 drop dramatically, which is why I kind of prefer 125 to 100, because a lot of the time we will be able to push just outside of our average daily range before the market exhausts itself. But to go beyond 125, it's had to really do something a little bit more special. And then 150, super special. But the times it hits that is way less than the times it hits that. That's kind of where I found in my testing was a sweet spot. And then scaling in half an ADR apart, if you get in at 170, 150, your next entry is going to be between 200 and 175 ADR. If it's done that in one day, the chances of a pullback of 1/4 to 1/3 of an ADR are very high. So that's kind of why I prefer that with a scaling of 0.5% personally. But just from what I see every day, you know, look at the ADR dash. If you go back through live rooms and scan through when I'm looking at the ADR dash, which is usually first thing in the morning, and especially in the afternoon sessions because we've had the London movement, you'll find a lot of those, but you'll find way, 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 way less of those. Because it's got to take something pretty newsworthy to move it up there, isn't it? So, I don't know. I'm still thinking about it. I've been thinking about it for the last 3 days. I still haven't made a decision. I just need to put it on the chart and turn it on. I need to put the money in the account first. That'd be a good start, wouldn't it? Blame the parents. We're raising them too soft. Yeah. We're not raising them, though, are we? This is the problem these days. We don't raise our kids. YouTube does. Yeah? My kids, right? I say, we're going to go and can you go and put the dog in the car for me? Can you open the trunk? No. I can open the boot. Trunk? What? It's like, I was walking home from school the other day, yeah, and this car came past me and splashed me. It went all over the sidewalk, all the water. I was like, no, it didn't. It went over the pavement. The sidewalk. It's been raised by YouTube. It's been raised by Americans. My kids are American. And I can't do anything about it. Try taking YouTube away from them. We sit down and watch a film, right? I have to bribe them with popcorn just to get them to watch a film, right? They sit down and watch a film, and I can see on their faces, 20 minutes into the film, they're like, I've never watched a video longer than 15 minutes. How long is this going to go on? It's 2.5 hours. It's Lord of the Rings. They can't watch anything for more than 15 minutes because that's what YouTube is. You watch things for 15 minutes and then either it finishes or you're bored and you move on to the next video. This is the generation we're bringing up. How the hell are they going to have the attention span to sit through an entire day of trading, watching a chart, waiting for it to hit a level and then pressing a button and then having to wait maybe 2 or 3 days for a result? We're screwed. The banking industry in the future is dead. There's not going to be anybody that's got the attention span to use the thing anymore. Apart from AI. They'll just get AI to do it, won't they? Of course they will. That is kids these days. That is, isn't it? Continue in the long direction. Yeah, hopefully. We'll see. No, it's coming down. So that propulsion gap is what I would like to see if we're going to continue for an up leg. One thing about trading, it's the only job you can guarantee won't be replaced by AI. I don't know. 10 master traders in a room each day will say something different. Yeah. But this is the thing with AI, isn't it? AI, if you say the word master traders, you hit the nail on the head there. Master traders are usually people of my age. 40s, 50s. Why are they master traders or not master, whatever you want to call them? Experienced traders. Experience, right? AI in minutes can have the experience of 100 years of master traders and immediately become the super grandmaster. That's where I think there is a possibility of AI really benefiting in trading. It still cannot predict the future. AI doesn't predict the future. However, we as traders, our job is when we enter a position is to manage the risk and manage the position and forecast the future movement. AI can do all of that way better than all of us put together. If someone can figure out how to get Larry Williams, all the experienced traders in the world that have ever made any impact, Mark Douglas, grab his psychology, figure out how that works, stick it in an AI, all that stuff. If someone can come up with that, I think that would be the ultimate EA. EA or AI. But then what does that trade against? You need a dumb AI to take the other sides of the trades against that AI. If you get two AIs that are super intelligent next to each other, they're never going to take the opposite sides of their trades, are they? How does that work? There's your brain fry for the morning. The only reason it works is because, as Rajiv just said, looks like a good short, and I went, looks like a bounce. Yeah, the reason that trade happens there is because of a difference of opinion. If you get two AIs that both know exactly what to do, are they ever going to disagree? Which means you'll never get a trade place, which means the market goes flatline. Not that. You'd have AIs in banks fighting each other, won't you? I don't know. Who knows what the future will bring? My father was a teacher. I literally watched him pick students up out of their seats and throw them into the hallway. Try that now. You can't touch them. You can't even look at them. My old school that one of my kids went to, the headmaster got sacked because one of the students was a Brighton fan, right? And the headmaster was amazing. Really, really good headmaster. And he got a Brighton shirt signed by the Brighton team, and the kid had done really well. He gave him the Brighton shirt as a well done, right? Everyone went, oh, that's a nice thing to do, isn't it? The problem was the student was in the room with the teacher alone, and the The student went, wow, whipped off his top, put the top on. As you would, excited kid. I'm going to put it on. The teacher got sacked because the kid got undressed in front of him in the room. Yeah. The world we live in now. I used to get caned. I used to get chalk thrown at me. My English teacher lobbed chalk, not the little bits of chalk, the thick bits of chalk, lobbed them across the room at you if you weren't paying attention. And when that hit you in the face, it would draw blood. That was allowed in the 80s. Try that now. They'd be catching it and throwing it back at you. No, they wouldn't, because they'd be asleep, because they'd be sitting there watching their phones under the table because YouTube's on 24/7. Got me curious yesterday. Planning to run a live H1 hedge with 1 to 1,000 broker, small account but very high risk, 0.5 to 1% per trade, just to see how it plays out. Yeah, very high risk, 0.5% to 1 per trade. If you look at the hedging account, which is this one, this went into 30 to 40% of drawdown at one point last year. It made 150% roughly, 140% return in that 9 months. But it went into 30 to 40% of drawdown. This is using 0.2% risk. So if you're looking to use 0.5% to 1% per trade, this went into 30 to 40% of drawdown using 0.2. Yeah. Double that to 0.4, you'd have been in somewhere up to 80% of drawdown. Yeah. If you're using 0.5, at some point last year, that would have blown the account. So I would say this in 9 months, this returned, this is $248,000 on a $100,000 account. So this returned 148% in 9 months on 0.2% risk. Big return, very big return, very small risk, but still achieved 30 to 40% drawdown. So, and this is why I don't like it, because of the 30 to 40% drawdown. It just scares me. I don't want to do it. So yeah, 0.5% is too much, I would say. Up to you though. But I would be very wary about using that much. If you're going to run it on all pairs, if you're going to limit the number of pairs, fine. But that's running every pair. That's running all 28 pairs. So if you reduce the number of pairs down to 8 to 10, yeah, 0.5% to 1% would probably be fine. But you're then going to miss out on the opportunities that played out, aren't you? So swings and roundabouts. Which strategy was that on? I don't know which you were talking about when you said that comment. I don't know what I was looking at on the EA here. So this is the H1 hedging set file for the market reversal alerts EA. This is the one that did 148%. This is ADR reversals. This is the one that did 68%. So this is the ADR reversal strategy with the market reversal alerts EA. These are all in the files section in Telegram, the set files for these. That's the hedging thing that I'm testing. Well, that's got a lovely profit. Look at that. Beautiful move. Euro yen nicely in profit. And this is my account, which is now 51,356 and was 50,000 when I deposited. This is H1M5. How did the H4M5 set file that you were running end up? Not very good last year. H4 did not as much. The problem last year was during that interest rate rally, we had a lot of trends which were narrow. So your H4 RSI extensions, H4 is a much slower strategy. To get an H4 RSI extension takes a lot more sustained movement than H1. And the reason I switched, if you remember, the reason I switched from H4 to H1 back end of 2022 was because of exactly the situation I'm in now. I was sitting there going, we're not getting any extensions. H4 was not extending. And I was sitting there going, I think I sat there for an entire week and I had no risk on. And I was like, I can't trade. Nothing's moving. We have got no sustained movement. So I switched down to H1 for a while to get into trades. So the H4 strategy last year returned 6,100, 6% for the year. Yeah, not good at all. Because what happened was when it got in to the H4 RSI extensions, we tended to get that sort of price action. Yeah. So what it ended up doing, it didn't make a loss, which is great. Yeah. Didn't lose any money. That's part of the battle. But what it did was a lot of drawdown control. Yeah. So every time we did get a good move, it was completely wiped out by the drawdown control on the move because everything was so slow. There was none of that on the 4 hour, which is why H1 works so well because H1, on a swing like that in the 4 hour chart, you've got swings like that on the hourly. So we've got 1, 2, 3, 4, 5 opportunities, whereas we might get one on the 4 hour. But I identified that, which is why I switched away from H4 because I kind of thought that might be the case, and it was. But it didn't lose money. It still made money. Just it struggled. It had tiny little profit months, and then it had losing months, which wiped out the tiny little profit months. Just didn't work last year. But this is why I keep saying about backtesting. You've got to backtest strategies over different market regimes. The market regime last year was different to the year before because we had an 18-month interest rate rally. I've never traded H4 M5 mean reversion through an interest rate rally. It doesn't do very well. I haven't traded it through an interest rate drop. I'm anticipating it being the same as the interest rate rally, so it probably won't do very well. When interest rates return to normal and inflation is stabilized at 2%, H4 M5 will probably start because the market volatility will return. We'll be back up to trading pound New Zealand at 300 to 400 ADR instead of 130, 150. Then we will start to get more of that type of movement. H1 mean reversion will probably get squeezed a bit more. But we won't know that until it starts to happen. It's all about being able to adapt trading. Yeah. Market conditions change. Your strategies need to be tweaked to match market conditions. No EA can do that. You have to do that. So, but yeah, it didn't do very well. But look at all the strategies together. H1 hedging, H4 M5, H1 M5, ADR reversals, total return across all of them to 320% across all 4 strategies. Yeah. 3x'd your money. That's what you're after. You're after a return on investment. That's what ROI is. That's what alpha is. It's return. It's percentage return. This is why we use this. Yeah. Your goal is percentage return. You need to return a higher percentage on your account than you start with. That's your job. All 4 strategies last year did over 300. So, but they're not all going to work. This is why you need, again, diversification. Why I'm trading stock indexes along with position trading and why I'm now looking to implement something new. I need diversification because I've no idea what this interest rate drop is going to do to markets. I have no clue. I've never done it. And the last time we had an interest rate drop of this magnitude and we don't even know what it's going to be yet, the magnitude of the interest rate drop, the market was in a different place. It was over a decade ago. World was a different place. Markets were different. Economies were different. Wars weren't happening. We've always had wars happening, but we're totally different. So you need diversification. If H1M5 suddenly stops working, I need something else sitting side by side with it. So trade them all if you want to, but segregate and beware that you are going to duplicate trades. You will, just by the fact that you're getting in when things have moved. You're going to always get sometimes when stuff is going to do the same thing as other strategies. Even 15 minutes is too long. TikTok generation. Yeah, I know. TikTok's even worse, isn't it? This is the thing, look at the stock index Hedge EA today. This is an hour and a half, this line. They couldn't have lasted longer than that. They'd have got bored. Which is probably not a bad thing, because they would have gone, I'm long. I haven't made any money yet. I'm going to go do something else. They would have only taken one trade, wouldn't they? Because they couldn't sit there long enough to focus on getting hedged even. My kids will hate me if they watch this. And here you are on YouTube. Exactly. But my videos aren't 15 minutes long. I only do this because I'm doing it. I only do the YouTube stuff because I'm doing this. I might as well do it and show you what I do. I don't have to. I'm still. If I wasn't doing live streams every morning and afternoon, I'd still be sitting here doing the same thing. I just wouldn't be talking as much. I'd be sitting here talking to myself, which is talking to the charts, which I do a lot. Like, for God's sake, Dax. Ooh. We had the chalkboard cleaner thrown at us. Oh, the cleaner. Yeah, I remember the cleaner. The chalkboard cleaner. That hurt. I don't think we ever had the chalkboard cleaner. We did have a teacher who was the DT teacher, like woodwork, metalwork. Yeah. He used to set us something to do, and then he used to disappear into the stationery cupboard quite a while. And he used to come out a while later. We never knew what he did in there. So, and that is where the TV and video was stored as well. My DAX trailing stop hit 1R by that long wick. You got a trailing stop on it, which means you're not hedged, or you're using the ORB. Profit, profit's profit. Looks like it wants to keep going. Yeah, it does look like it wants. It still looks bullish. The FTSE. I mean, this is the pre-market opening range. Yeah, we haven't gone anywhere. It looks there's a lot of price action going on, but realistically, the market's not moved, is it? We're still. That is where the pre-market, or that's the open, and that's where we are. Literally haven't gone anywhere yet. FTSE. Stuck. Down the line, I might get a small account and let H1 hedging set file run as a holiday fund. I'm very tempted to do the same thing with about $5,000 and stick it in there, because if the performance is the same as last year, we should be able to get $7,000 out of it, which should be a holiday, isn't it? So I'm thinking very much the same. But it's high risk, so that $5,000 might disappear. Just got to bear that in mind. But yeah, I'm thinking the same. But I would be tempted to intervene with it as well. That's the thing. Happy New Year, Tom. That was ages ago. It's 10 days ago. Are you still trading futures? Nope, not at the moment. I'm just trading CFDs. Probably why people are running after fast scalping strategies. Yeah. But they will soon learn that they don't work. Well, they do work. There's a lot of people that keep talking about these HFTs at the moment. it's like everything in trading. Someone gets wind of something called an HFT and they suddenly go, hey, I've got an HFT EA. No, you haven't. A high frequency trading algorithm in a bank has preferential market execution. That is why it's an HFT. You cannot trade HFT on CFDs because you have a spread. Doesn't work. HFTs are in and out with 1 to 2 ticks. The HFTs that people have made work on the 1 minute chart. They're billions of miles behind. The model doesn't work. They've just created something that might work on the 1 minute chart, but it's not HFT. High frequency trading algorithms are part of the market maker desk, and the market maker has preferential execution with CME. So its orders get placed before yours and mine. When you see on a footprint chart, or rather on a ladder, the number of orders at each price point, if you've got 20 orders at that price point, yeah, and an HFT comes along, the HFT will jump the queue, get executed, and those 20 orders will still be there. And 20 will disappear from that side, but they won't disappear from this side. The HFT takes them. They pay preferential treatment. They get lower execution costs. And that is what a proper HFT is. You can't beat them. You can't beat them because the banks have preferential execution. But people come up with it. Same with everything. You know, it's like I keep saying, everything is recycled. Someone goes, HFT. No one's got an HFT EA. This is an HFT EA. No, it's not. Load of crap. Fast scalping strategy would be more accurate, yeah. The DT teachers were always the least formal. I know they were. My DT teacher used to stand there with his hands down his trousers for the whole class. This is the guy that used to go into the cupboard. Very odd. Always the best class that was, DT, because you didn't do anything. And you got to smash stuff and saw stuff. Again, you can't do that these days. I was using a bandsaw without goggles, slicing wood in the 80s. They wouldn't allow you anywhere near a bandsaw these days. You'd have some idiot go, push him. I saw it on YouTube. Oh. How much money did you have saved when you quit your job? I didn't quit my job. My transition into trading was transitionary. So my trading income overtook my income from my job. So I didn't do it. I was lucky. Most people that want to do this have a job working 9 to 5, and the only way they can really go into this full time is to quit their job and do this. I'm lucky in that I ran my own business, so I was sitting most of the time in front of a screen in the day, and I could have charts up constantly all day long, and I could do both jobs at the same time. When the income from the trading took over the income from the other job, that's how I got into it. So I was lucky in that respect. How much money did I have saved? My first, what I would class as my first proper trading account. Oh yeah, how much money did I have saved for the transition? I didn't, because I didn't need to. My first proper trading account was 15K. I say my first proper trading account. The first account I used after going break even that I didn't blow an account from. That's what I would class it as. The launch, kind of like a launch pad account, if you like. So my transition into profitability was first of all break even. If you can have a month where you don't lose money, you are ahead of 95% of traders. If you then have another month where you don't lose money, you are ahead of 99% of traders. When that next month comes in and it's profitable, and then the next month is either profitable or a break-even month, you're there. You've done it. You've cracked it. So that's the point when you should not blow an account again, because you will have learnt, you will have walked on water, got killed, blown an account, got the eureka moment the second time round, and jumped over onto auto trading. Yeah, autopilot. That's when you put a lot of money down, because you've proven to yourself that you can do this. You've proven to yourself that the strategy is robust, and you've done the maths and gone, well, if I could pay the mortgage with it, I'd only need X. In my case, 15 grand, 1,500, 10%, paid the mortgage. That was my step, was like, shit, this is paying the mortgage now. Up it. Now it's paying the mortgage, the electricity, the car. Up it. Now it's paying everything. That's the transition. But how you do it is down to personal circumstances. Everybody's going to be slightly different. Some people are sitting on pension funds. I know somebody who is 55 years old. He has just taken 25% of his pension. When you get to 55 in the UK, you can draw 25% of your pension out. He's just done that, and that has become his trading capital. So he's using his pension, 25% of his pension, to trade into his 60s. Great idea. But he's fully aware that he could lose it and have to go and work in Morrison's for the rest of his life. You know, who knows what's going to happen in the future, but all sorts of ways you can do it. I was hedged, but closed my shorts on the Dax and FTSE due to the H1 price action. H1 price action on the Dax is massively bullish, though. FTSE's not anymore. Options, don't trade options. Never traded options. Don't know anything about them, so don't trade them. Same as Bitcoin. Don't know anything about crypto, don't trade it. Don't need to. There's plenty of instruments out there. I've got 28 FX pairs. I don't need anything else. What position side was you trade on a 5K account? 0.02 or 0.03. Again, how aggressive do you want to be? 0.02 is safer. 0.03 is more aggressive. 0.03 gives you more drawdown control options, but might get you into more drawdown. Will get you into more drawdown. What I would say, Heffron, right? Stick the EA on a chart with a $5,000 account, set the lot size to 0.02, run a test. Over the same period of time, set the lot size to 0.03, run a test. See what the difference is. There's a risk is risk. Everybody's got a different risk tolerance. I say to use 0.01 per, ideally $1,000 or $2,000 in your account. The reason I give options is because there isn't a right or wrong. If you use it with 1,000 per 0.01, it's better than using it there if you're going to draw down. If you don't go into drawdown and everything works out, it's better doing that. But I don't know whether you're going to go into drawdown or not. Neither do you. So which is the best one to use? I don't know. How comfortable are you with drawdown? How comfortable are you with risk? Everybody's different. All I would say is you could always up your lot size. You can't put it down. If you go in hard and heavy and you get into drawdown, you can't go, oh, I'll just use 0.02 instead of 0.03, which will give you 1/3 less drawdown. Think about it. If you go in with 0.02 and you go into drawdown and you go, well, I'm only in 7% of drawdown and that's a 4 ADR move. I'm going to go up to 0.03. You can go up. You can't go down. You can start with a $5,000 account, get it profitable for 3 months and then move up to a 15. If you start with a 15 and you go wrong in the first month, you can't get it back. Always start small. Worst thing you could possibly lose is maybe a month or 2 months of experience that you'll gain. That's all that can happen. You can always go up. I've tried HFTEAs. They work very well on demo. On live accounts, it's death by a million cuts. Yeah, because it's live order execution. Demo is instant execution. You don't get instant execution on a live account. Depending on whether you're an A book or a B book customer, you'll get different execution times as well. At the moment on Darwin X, I'm getting super fast execution. I know why, because I know I'm on their A book, because they haven't seen my experience on this account yet. When this account suddenly starts making money, you'll find that my order execution will slow because I'll be moved to the B book and they'll be farming me out to dark pool orders. What's a WR? I don't know what I was talking about then. Or trade the US markets in the evening? Yeah. Can trade. Again, everybody's going to have a different time they can trade, different. Everybody's different. This is why there's no course that fits everybody. There's no this new course I'm trying to put together is very broad in the fact that I'm going to teach you how this stuff works and give you the tools to go off and find out how to make it work for you. Because I can teach you a strategy, but if the strategy is impossible to execute, we've got somebody at the moment in the Telegram group who is a scaffolder. Yeah, he cannot be sitting in front of charts all day long. Therefore, he cannot trade the SIH or ORB strategy, and he can't trade H1M5 manually. He can trade H4M15 because he's only got to check the charts every 4 hours. He could trade daily, hourly very easily because he's only got to check it once a day. Check it in the morning before he leaves, check it in the evening when he gets home. Yeah. The system and the strategy and the methodology of position trading is the same across all time frames. You're scaling in moves. Markets are fractals, so the same moves happen on all time frames, but the time frame you can execute and monitor is different depending on your job. So there isn't one size fits all strategies. I remember using a milling machine and a forge in DT. Yeah, forge. They let you poke fire. You just couldn't do that these days, could you? They just wouldn't let you. Health and safety is just not allowed, is it? Sim playback. You're not considering spread. From this live is already less profit. Well, you do consider spread. If you've got a decent data provider like Tick Data Suite, you have live spread. Yeah. Variable spread. I mean, you're never, this is the thing, anything you do in here, yeah, in the strategy tester is never going to work in real time. Yeah. You can prove this to yourself, right? Go and get the stock index hedge EA, ORB EA, market reverse alerts EA, whichever you want to, right? And whichever you're using, put it on an account and let it trade for 2 weeks live, right? And stop it. Look at those results. Go into the backtester using exactly the same set file, instrument, time frame, and everything, and run a backtest over the same period of time. You see what different those results are. They are massively different. You will never get the same result. Backtesting is reliant 100% on data, and data is different on every broker. Spread is different on every broker. Opening and closing times are different on different brokers. Some brokers close their candles on different hours on the 4 hour time frame. Some close at 2, some close at 12. Yeah, that's all different. What has happened today will never repeat itself in the future. So everything you do in that backtester is never going to give you any real confidence in that strategy or set file repeating itself again. What it can do is show you robustness. That's what you use backtesting for, robustness. You run a test and you get something working. And then you go, right, instead of using the 21 RSI, I'm going to use the 22, 23, 24, and the 19, 20, and 18. Yeah. Is the strategy still profitable if I didn't get the same RSI reading? Yes. Okay, then it's robust because it doesn't matter where the RSI was as long as it was somewhere up. That's robust. If you're relying on something that trades on the 5-minute time frame, that spread is the difference between profit and loss. One extra tick means that the P&L goes down. Can't use it. And this is why 99% of EAs on the marketplace, and I'm not exaggerating, 99% of the EAs on the marketplace will never work in forward testing, because they are curve fit to a set of data that has happened in the past and will never repeat itself. And they are curve fit to such an extreme to make them as profitable as possible that they've picked the most outlying possibility of results that will just never happen. That's why it doesn't work. Because they all use a stop loss as well. You've seen me in here. The difference between a hedge and no hedge is a tick. That's the difference between $1,000 day and $1,000 loss. Yeah. You do that 10 times a year. That's the difference between a P&L curve up and a P&L curve down. One tick. That close when you're trading 5-minute charts. Hourly, 4 hourly, totally different story. You can rely much better on backtesting on hourlies, because your entry could be there, there, or there, because that candle is that big. If you got in anywhere in that candle, you're okay. You've got so much room to play with, which is why nobody in their right mind that is trading on anything lower than 5-minute timeframes, unless there is an edge on momentum. Momentum works on 5-minute, which is why we trade SIH and ORB. But we don't do anything else on the 5-minute charts, because it's just algorithmic chop, apart from that one time of the day where the market goes mental. Other than that, this time frame is where it all starts. You need to see longer term bank movement. Afternoon, Ismet. Health and safety, what's that? Yeah, we didn't have health and safety. Some of the stuff we used to do. Bumps as well, you know, it's like playing British Bulldogs. When you think about it, what a stupid game is that? Let's run at each other at 900 miles an hour. And if you don't get out of my way, I'm not getting out of your way. If we hit each other, we hit each other. Whatever. Bang. Knocked out. The bumps. Let's get this guy by the legs and the arms and throw him up in the air because it's his birthday, and then drop him on the floor. Don't worry about his back. It'll be fine. Let's lean back on our chairs. Until that one kid in the school leaned back too far and broke his back. Let's carry on leaning back in our chairs, because health and safety didn't exist. We didn't learn from anything, did we? The teacher chucked that chalk, it hit you in the eye, blinded you. Next time, the kid won't do that. That's why it works. I was just referring to my German to English translation as to what you mentioned about testing. All right. Cheese rolling. Yeah, cheese rolling. If you don't know what cheese rolling is, if you're not from the UK, this is the most ridiculous sport ever. Oh no, let's see the action. Oh, that looks like quite a tame one, doesn't it? People die doing this. Oh, look at that guy in the green. What is wrong with these people? So we're not allowed to lean back on a chair in school, but grown adults are allowed to do that running down hills. Enough said. Right, leave it there. I don't think I'm going to get out of these hedges today, so I'm still going to hold this. I still hold these levels. That's all I can really do with it today. It's kind of moved, but it's not moved far enough really to make a decision to get out of any of these. This is back where we started. We're 2 hours in. It's not gone anywhere. So can't do anything with this today. There is a good chance we might get that hit. So I will still do that on the DAX. But other than that, it might be a lost day today. Not a lot I can do about this really. It's just stuck. So hopefully we'll get a little bit more bullish price action coming through, but we'll see what happens later. What about extreme ironing? Also from the UK. Now that's one I haven't seen. I will look that up in a minute. Extreme ironing. There's a certain class of person that does this type of sport, isn't there? Probably not too bright. I just don't know. And they have guys catching you at the bottom. Like that's going to matter. Yeah. Hang on, there's somebody hurtling towards me doing a cartwheel at 60 miles an hour coming down a hill. Shall I stand in front of him and catch him, or shall I let him pass? I know what I'd do. I'd class that as the game. The game is you've got to avoid the guys coming down the hill. That's the real game, isn't it? Don't get in front of that guy, because when his leg hits you in the nuts at 70 miles an hour, you're never having children. That's not fun. Anyway, I've got to go. I'll be back this afternoon, 2:20, and tomorrow morning, 7:50. Hopefully something's moved at some point today. I'm going to get my other account set up today, hopefully, and I'll start the other strategies. So we'll see. But at the moment, it's a bit of a struggle because we're stuck everywhere. All right, have a good morning. I'll be back this afternoon, 2:20, and tomorrow morning, same time. If you need anything, I'll be in Telegram. Other than that, have a good one, and I'll see you next time.